Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Also, father to a second son. Well done, Garth.
Yes, thank you very much. Very happy.
Yes, so that was why we had the show last week on binary options, which was a pre-recorded educational show. I hope people enjoyed it. Garth, and given that you've taken maybe a week's hiatus from the market, do you notice any changes, or are we sort of still stuck in this holding pattern?
We're still very much stuck in this holding pattern like we were 2 weeks ago when we last recorded a show on the markets, as it were. Not a hell of a lot has changed. So as usual, I'm going to start with a quick look at the S&P 500, then we'll look at the top 40, and then I've got some interesting stuff that we can look at in terms of the new weightings on the top 40, the currency, and a couple of the heavyweight stocks. We can do some analysis on all of those.
Okay, well, let's start with the S&P 500.
Yeah, so the chart of the S&P 500 is up on the screen at the moment. We're approaching a point of resolution here. On previous shows, I've always mentioned that the fact that we broke below that support at 2160, we then went down to the next support level at 2120, which has held perfectly in the last few weeks. And you can see now the market has been sort of climbing a trend. If I join the June low, that was the Brexit low, and I join all these recent candlestick tails down here, you can see how the market's gradually been climbing up this upward trend. But we've also got an overhead resistance here, which comes in at about 2180. So right now, we're sort of sandwiching our way into the apex of that triangular structure, and it's likely to break one way or the other. By the time we record the show next week, we probably will know which way it's decided to break.
Well, we hope so.
We hope so, yeah. So, you know, it needs to either break above 2180 if it's going to be a positive, bullish breakout, or alternatively, if it's going to come off to the downside again, below 2150 would then be a downside break, which would probably take us back to 2120 again. So those are really the critical levels that we've got to watch in the week ahead, and that'll give us some clues as to whether we need to be bullish or bearish in the weeks ahead.
I mean, aside from the evidence presenting itself to you, where would you say the odds lie on what sort of break is likely to occur on the market?
Sure, it's very difficult to say. I mean, instinctively, I do get the sense that this S&P 500 might pop to the upside. It did break to the lower end recently, and it didn't follow through. So the fact that it hasn't followed through to the downside might well mean that there's enough buying impetus at the lower levels to prop it up and therefore push it higher. So I won't be entirely surprised if we do see an upside break here. But I say that being very much sort of a kind of on the fence at the moment.
And what about the local market? Because I think you have quite a different opinion on where we might break, because we've also been somewhat stagnant. Yeah,
we've been stagnant for a long time, and our market's very much being driven by what's happening in the currency at the moment. The rand is very strong against the dollar, but also particularly against the pound, but that's because the pound is very weak. They've given us a timeline now on when Brexit will start to be enacted. So the pound has gone even weaker on that news, which has made the rand stronger against the pound. So this chart of the top 40 index hasn't changed very much. I've gone on and on and on about this 45,000 lateral support level on the market. That level was breached slightly to the downside while I was away now. And we've seen the market popping to the upside since then. So we can say really that for all intents and purposes at the moment, 45,000 support does seem to have held. But will this bounce that we're seeing now, will it actually have any follow-through? Or is it just going to be a dead cat bounce that eventually fizzles out and ultimately comes lower again? And my sense is that there's still a fair chance, I think, that we're going to see that 45,000 broken to the downside convincingly at some point, because when a support level like that is tested over and over and over and over again without any meaningful rally up off of it, very often you find that will break to the downside, even if it's temporary. But you know, we position for that. If we look at the weekly chart here of the top 40 index, now obviously this being a weekly chart, every candlestick pattern here represents 1 week worth of trading action. And again, you can see the 45,000 support indicated there by the blue line. Just to reiterate the fact that we've got an option structure in place at the moment, which runs out to the December futures closeout. And anything below 46,500, we make money on that structure. We make our maximum money below 43,500. So if I'm right, and we do see a break to below this 45,000 level at some point, and it comes down into this sort of area here where I'm pointing out now, that would be good for our portfolio because we are well positioned for that with this bearish option structure.
I mean, do you think it could go as low as where you make the maximum profit? Because I know Frans de Klerk is particularly bearish, although he is a natural bear and he's generally short the market. Or do you think it's a 5 to 10% pullback that we might experience?
Well, look, we're trading at around about 45,000 now, just above 45,000 on the top 40 index. To go to 43,500, where we would make our maximum profit, that's only 1,500 points, which is 3%. So it doesn't take very much for that to happen. So I think there is a reasonable possibility that we go down there sometime in the next couple of months.
Yeah, although that would be also contrary to kind of the Christmas rally that everyone is used to for the past 7 or 8 years. Garth, and of course the top 40, and we have spoken about this before, is now had its reweighting as a result of SAB Miller. In fact, today is essentially the last day that we'll ever see it on the exchange. And just talk us through how the weightings have changed since we spoke about this about 2 weeks ago.
Yes, well, you'll recall that SAB Miller was basically the second biggest share on the JSE behind Naspers. It made up about 13 or 14% of the index before it was delisted. Now it's been delisted, the weightings in the index have to change. So what has happened is that Impala Platinum has come in at the tail end of the top 40 index to keep the number of stocks the same, but then all the other index constituents need to be reweighted, and their weightings need to be increased proportionately to effectively soak up that void that was left behind by SAB Miller. Yeah. So you can see the new weightings, and this is now just focusing on the top 10 shares in the index here, but you can see the new weightings illustrated here. So now Naspers is getting close to 20% of the top 40 index. I mean, that is significant. And it implies that we are very, very dependent on what Naspers does in our market. So it's an important thing to keep in mind. Very important thing to keep in mind. And then obviously Billiton's increased, Richmond, the rest of them have all been upweighted slightly. But the top 4 shares here, basically Naspers, BHP Billiton, Richmond, and British American Tobacco, those 4 shares now collectively make up 40% of the weighting of the top 40 index. So it's quite useful to do an analysis of those 4 shares to try and draw some sort of idea of what the index might do. The other thing to note is that these shares, and not only those 4, but the rest of them in the list mostly, are also very currency-sensitive stocks. So it means that we need to be very cognizant of what the Rand does, because whatever the Rand does has a very, very meaningful impact on the top 40 index.
Yeah. I mean, just, for people who trade like Satrix products, those weightings are going to be capped, because otherwise, especially like, say, an Indy 25, you would have Naspers too much of a weighting. So is that going to influence the market at all, do you think, that the ETF products are going to cap the weightings in their sort of
no, well, as far as my understanding is that the ETFs, and obviously it depends on what ETF it is, but if you talk about, for example, a Satrix 40 or an Indy 25 ETF, the weightings within those ETFs need to replicate whatever the JSE weighting is for those shares. Yeah. So there's no cap. If Naspers market capitalization, for example, continues to grow and grow and grow, then its weighting in the index will also continue to grow and grow. It's not capped at any point, unless you're starting to talk about the equally weighted ETFs. Okay. So there's a difference. But when you talk Satrix 40 or Satrix Indy, those ETFs actually have to mimic the index weightings as per the JSE.
Yeah. Garth, we'll talk about the shares in a bit, but let's have a look at the Rand and what your expectations are, because, as you say, it's crucial as to what happens to the overall market.
Yeah, well, that's it. When you talk about those big heavyweight stocks all being influenced by the currency, it's therefore important to look at the currency. So this is the Rand-dollar exchange rate chart for the year to date. And as you can see, we saw the weakest levels for the Rand during January of this year, and it's been gradually grinding its way stronger and stronger since then. Now, we sit at a situation at the moment where the Rand has been strong since, it strengthened by 5% during September, and it's continuing to strengthen today. What I see here is a little bear flag pattern on this chart, which is beginning to break to the lower end today. If it starts to really go below 13 Rand 55 convincingly, then I think that brings in the previous lows from August, which was at about 13.20, and then quite possibly the lower end of this big channel, that big blue channel, which comes in at about 13 Rand to the dollar. So, when I look at this chart, I still do think that there's potential for the Rand to go a little bit stronger in the near term, based on what I'm seeing here.
Which would be great for us, but not necessarily for the 4 shares that you're going to be discussing now?
Well, this is it. So let's quickly have a look at those top 4 shares on the index. And the first one here is Naspers. So I know I spoke about this a couple of weeks back on the show, and I said that at that stage we were pushing up against the upper end of a channel here at about 2,550, and that the likelihood is that we were going to see this share price consolidate and pull back over the following 6 weeks or so. Well, we're now about 4 weeks into that process, and what I see here again is a little bear flag structure on Naspers, in line with the strength in the rand. So there's a similarity between the chart structures from that point of view. If we start to see this little bear flag structure on Naspers begin to break to the downside, basically if Naspers trades underneath its 50-day moving average, then I think it's going to probably come to the bottom end of this channel that's indicated with blue here, and that brings us to a support level at about 2,200 rand. So I think there's a fair chance that that happens, and if it gets to 2,200, I might well be interested in buying it at those levels.
And BHP Billiton?
BHP Billiton's interesting. It has been grinding its way higher throughout the year, but also notice for the last 6 months, it's really just chopped along sideways in a very, very messy, choppy range. It had a big gap up last week, Thursday, and that was following news that OPEC have agreed to an oil production cut, and all the oil stocks, and BHP Billiton is an oil producer, popped up on that news. It's left a very big gap in the chart at about 196 Rand 60, and usually these gaps are always filled. So I would expect that that gap is likely to be filled on BHP Billiton in the near term.
In other words, you'd expect a retracement?
I would. I mean, it's trading at about 208, 209 Rand today. I think if it comes back to about 196 Rand, that would be approximately a 5% pullback, and that wouldn't really surprise me very much.
And Richemont, I mean, this is a weak stock.
Yeah.
So I don't know if you expect it to become even weaker, or if it's just going to tread water where it is at the moment.
Yeah, look, Richemont has been weak. Again, you can see the downtrend here that goes back to November of last year and how tightly that downtrend fits. It reversed off of that downtrend in the middle of September, and now again, we've got a little bear flag structure busy forming over here on Richemont at the moment. If we start to see Richemont breaking below 82 Rand, then that points to a target projection of 77 Rand. So if the trend is your friend, they say, then the trend here is down, and I won't be that surprised to see another leg to the downside here either.
And then lastly, British American Tobacco. I mean, is there any share that you see having some sort of positive time in the market?
Well, look, I mean, remember, these are all currency-sensitive stocks. So with a strong rand, it's not unexpected that they are struggling a little bit under the strong rand. British American Tobacco over here, you can see it's got this big band of lateral support at about 840 Rand per share. Again, similar to the other charts, it seems to be forming a little bit of a bear flag type of structure here. And if that starts to break to the downside, what would need to happen is that below 868 Rand, that would then probably bring this 840 Rand support zone back into play again.
Okay, so generally things pointing towards some sort of dip in the market, which would be good for you, but I suppose only if the market's, the December futures closeout is, below 43,000 or thereabouts.
Well, that's it. So we position for weakness in the market. So if these things do go lower, that'll suit me. Obviously, if we see the market going roaring high, that's not going to suit me. But as things sit right now, I'm quite comfortable to sit net short with our option structure.
And you are in the money, and perhaps you can show us the portfolio, which hasn't changed, and I suppose people might be a bit disappointed that you haven't put on any new trades for the portfolio.
Yeah, they might be, and this is a kind of market where I think the style of trading maybe needs to change a little bit to more intraday type of trading, which is not really what we've always done on this show, but I know it probably is getting a little bit stale that I haven't done much for a while, because I've always had this position on in the expectation that the market's probably going to have some downside, which I'd like to participate in. But we're still up 17% for the year to date, so overall it has been a good performance, even if we haven't been all that active recently.
Yeah. I think after end off, you've got a couple of courses coming up.
I've got high probability courses coming up in Cape Town and in Johannesburg in November, and then my colleague Andrew Todd runs a Top 40 course, and he'll also be presenting that in Johannesburg on the 12th of November. So anyone that would like information on any of these courses, please send me an email, garth@traderscorner.co.za, and I'll send you all the details.
And also check out the website for our weekly email alert.
That's it. If you want to receive a weekly email from us about what's going to be on the show, go to traderscorner.co.za and sign up for the free weekly email, and then you'll get an email every Tuesday telling you what's coming up for that week on the show.
Okay, great. Garth, we'll leave it there. Garth McKenzie is founder and editor of Traders Corner.